Welcome back to Chapter 2 of our series, Master Your Money, Budgeting That Actually Works. In this episode, titled Know Your Numbers, the Financial Snapshot Exercise, we're going to help you take a simple yet powerful look at your finances. By the end, you'll be equipped to assess your financial situation and understand where you stand. So let's dive in. About half of Americans don't track their spending at all. Yet many still say they're pretty sure they know where their money goes. In this episode, we drop into that gap between confidence and reality and explore what your bank balance isn't telling you. If your money could file a report on you today, what would it actually say? Not last year, not once I get my bonus, but this exact week. Most of us carry a vague mental scoreboard. Student loans over here, a retirement account somewhere, a card we mostly pay off. But when you try to total it up, the numbers blur, like trying to recall a song from memory instead of looking at the playlist. This is where a financial snapshot comes in. A brief, date-stamped summary of what you own, what you owe, what comes in, and what goes out. It doesn't predict, and it doesn't judge. It just shows you the current state of play so you can make sharper decisions. In this episode, we'll turn that fuzzy scoreboard into a clear, one-page view and show how 30 focused minutes can reveal trends you'd miss in months of guesswork. Here's where this gets interesting. When researchers look at who actually hits their savings targets, it isn't the people with the highest income. It's the ones who check in with their numbers at least once a month. They're about twice as likely to reach their goals. Not because they're perfect, but because they get frequent, honest feedback. That snapshot doesn't just sit in a folder, it becomes a decision tool. Should you attack debt faster? Can you safely increase retirement contributions? Are lifestyle upgrades creeping in? Each check-in is like updating the GPS on a road trip, quietly correcting course before you drift miles off track. Start with a date at the top of the page. That matters more than it seems because you're not trying to capture your finances in general, you're freezing one specific moment. Then draw a simple 4-box grid. No spreadsheet, no app required. Label the boxes: assets, liabilities, income per month, expenses per month. In assets, list anything that has value today and roughly what it's worth. Checking and savings balances, retirement accounts, brokerage accounts, cash, and, if you know the numbers, the market value of things like a car or home. Don't stress over perfect precision. A ballpark that you could defend to a skeptical friend is enough. In liabilities, write every balance you owe: credit cards, student loans, car loans, personal loans, buy now, pay later totals, mortgage, even money borrowed from family. Interest rate next to each one if you can find it. This is where many people realize they've been mentally ignoring a few lines of their real story. Now move to income, your take-home pay after tax, plus any side income that has shown up at least 3 times in the past year. Irregular windfalls don't go here. You're mapping the financial weather, not the occasional lightning strike. In expenses, jot your best current monthly reality, not your ideal. Start with fixed commitments: rent or mortgage, minimum loan payments, subscriptions, insurance, childcare. Then estimate variable categories: groceries, transport, eating out, fun, personal care. If you're unsure, pull the last statement from your main account and skim line by line for a 5-minute reality check. Once the 4 boxes are filled, do 2 quick calculations. Net worth equals total assets minus total liabilities. Monthly margin equals income minus expenses. Net worth shows your accumulated position. Monthly margin shows whether your current pattern is building or eroding that position. Someone can have a negative net worth but a positive margin and be on an upward trajectory, or the reverse. Think of this page like a single screen on a finance app. Everything important visible at once, so you can spot what looks off without digging through menus. Your job isn't to fix anything yet. It's simply to see the whole picture clearly enough that your next move is informed, not guessed. Think of the snapshot page as a control panel you'll revisit, not a one-time worksheet. On month 1, the numbers might feel random. By month 3, patterns start to pop. the temporary subscription that never left, the side hustle that quietly became a real income stream, the car payment that eats more than you'd like of your margin. Little shifts, a $30 bill reduction, an extra $50 to savings, begin to register visibly instead of disappearing into the noise. Concrete example. One person's first snapshot showed a tiny positive margin, so they paused big goals and focused on trimming 3 recurring costs. 2 months later, the same simple layout showed their margin had doubled without a raise or dramatic lifestyle change. Another person saw that nearly the same amount was going to debt and to dining out. Just noticing that ratio nudged them to redirect a bit more toward balances they truly wanted gone. The power isn't in perfection, it's in seeing cause and effect accumulate from snapshot to snapshot. As simple tools get smarter, that one-page view of your money will likely feel less like homework and more like a newsfeed. Instead of scrolling social media, you might scroll today's money story, where patterns you'd miss on your own are quietly highlighted, recurring fees, lifestyle creep, or room to invest more. Over time, that regular glance can shift from anxiety to curiosity, the way checking your fitness stats turns effort into visible progress and small tweaks into meaningful long-term change. Over time, those monthly numbers can start to feel less like judgment and more like data from an experiment you're running on your own life. You might test a no-takeout month, a mini debt sprint, or a boost to retirement, then watch the snapshot react like levels on a mixing board, each small adjustment changing the overall sound of your financial life. Here's your challenge this week. Block 30 minutes and complete a true financial snapshot by listing every single business expense from the last 30 days directly from your bank and credit card statements, then tally the total. Next, calculate your real average monthly revenue for the last 3 months and compare it to that expense total so you can see, in black and white, your actual profit or loss. Finally, choose one recurring expense over $25 that isn't clearly driving revenue and cancel, downgrade, or pause it before the end of the week. This was Owl Up, your daily step forward. To keep learning with structured courses and more insights, go to owlup.co. Until tomorrow.